Good morning, welcome to Join the Dots. Again, we're going back to gold and silver today, and we're doing it for a reason, because it's the only ways I can see that you can both protect yourself but also profit considerably, leaving yourself better off after what happens actually plays itself out. The inversion matrix, I'll keep going back to it because it becomes more obvious. Every day I watch the world, it becomes more obvious. Okay, now in one of my earlier programs I talked about a gentleman called David Batemen, and what David Batemen had done was last year he took delivery of $500 million of silver. Sorry, 800 million it turned out in the end. 800 million. Originally it was reported as 500 million. He took delivery of $800 million of silver. Physical delivery. He has it stored. Yes, that has a cost at that sort of amount, but it's now worth 1.2 billion. So he's made 50%. And he hasn't used any leverage. There's been no risk of borrowing, no risk of debt rates, no risk anywhere. He's got the silver somewhere, and it's now worth 1.2 billion. And I like his comment, which he says, more bullionaires coming. Bullionaire, a billionaire through bullion. And that's what I see. And I'm going to try and explain more of it to you today so that you can understand that while it seems that if you look at a chart and if you believe chartists and financial advisors and anyone who doesn't understand what's truly happening, gold and silver are dangerous because they're so high. They're not. They're not. In this world, remember my video of yesterday? Remember the chaos that's being sown both within and without countries is monumental. I've never seen it so mental. Okay, it's just mental what's going on. So, is it too late to buy gold? No, is the honest answer. No is my answer. $200 an ounce silver is Mike Maloney's latest video. I'm watching his video and I've watched about 7 minutes of it and I've written 3 pages of notes, and that's what we're going to have today, those first 7 minutes. So David Batemen, no leverage, has made 50% with no counterparty risk, nothing at all. Now, one of the things that Mike talks about in passing is people being sold the idea of leasing their gold or silver for 4%, 5%, whatever. Now, I've even seen this, and I've commented before on it. One of my favourite economic sort of information places to look is Eurodollar University. You know that. I think Jeff Schneider is exceptional. Jeff Schneider, Greg Manarino, they both see the same thing. It's the bond market which determines everything. The equity market is the clown to amuse you. The bond market is what drives everything. And the bond market is what will drive everything downwards as well as having driven it upwards. So what I'm saying here is that it is, as you can see, David Bateman's made 50% in a year. You don't need to lose your total control over your asset, i.e. silver or gold, by leasing it to a third party who you have no idea what their financial circumstances are. I've been asked to lend money before, and I've said to the person, well, how are you going to pay me back? Oh, well, so-and-so owes me money. I said, well, I'm not lending it to you then, am I? I'm lending it to them. Can you see it? If you're lending it to someone who then says that their only way of getting it back to you is because someone else pays them back, means you're not lending to that person that's asking you for the money, you're lending to the person that they have lent money to. Doesn't make sense. Just doesn't make sense. Counterparty risk grows exponentially down a chain of people who you don't even know. Okay, so gold leasing, and we've been approached, our site's been approached for advertising. We've refused it. Why? Because it's not good product that they're trying to sell. And of course, the first advertisers you get offered are the worst products, just the way it is, because they're desperate to find new ways of advertising. So gold leasing, I don't agree with. Mike goes into that. Now, why? Because gold is safe. It's insurance against crisis. Now, what did we see yesterday in yesterday's video? We saw the Unite March, we saw the Metropolitan Police lying, we saw the BBC lying. So we've got institutional lying to the people. And then we've got Charlie Kirk in the US, and then we've got people celebrating his murder. So it means you can't unite the country. One side has to win, one side has to lose. You cannot unite it. Not with that atmosphere. And that atmosphere has been stoked up over 10, 20, 30 years, hasn't it, really? Ever since 2000, I think. Because in the 70s, 80s and 90s, the world was a beautiful place. Beautiful place. I watched my Live Aid video the other day, and I was at Live Aid, and 85, what a fantastic time. Music, freedom, happiness, laughter. So, and we go back to the 1980s in talking about gold, because gold has only just now gone past the 1980 inflation-adjusted price of, I think it was just short of $2,000. Okay. And I was there, I was selling gold at National Westminster Bank at the time to people who were coming in and buying it because Russia had just invaded Afghanistan in 1980. On the back of that, the Bunker Hunt brothers tried to corner the silver market, realising that if gold goes to 2,000, silver's going to chase it up, and therefore they tried to corner the silver market. They came unstuck. Afghanistan did not turn out to be World War III, and the gold price came down and the silver price came down. Okay, so that was a false price, as a lot of people believe. Textbooks tell you, and every professor out there talking in economics will tell you, that 1980 gold price was due to inflation. It was not. Up to 500 was due to inflation. The next 400 or so was due to World War III risk in Afghanistan when Russia first invaded. Just a fact. Just a fact. Not a fact you'll read in a textbook, not a fact you'll read in an economics book, not a fact you'll read in a salesman's book. Okay? So, but there's similarities now, aren't there, to 1980? We've got wars everywhere. We haven't just got one war. We haven't just got Russia going into Afghanistan. We've got Russia, Ukraine. We've got Gaza, Israel. We've got Iran. We've got now Trump attacking Venezuela through the drugs, and fair enough, through the drugs boats and sinking them. But this is all uncertainty, massive uncertainty. Okay, so we've got a worse situation than 1980. So therefore, what we're looking at is more inclination for people to hide in gold and silver and take it as protection, if not trying to make money. But then Mike comes on to some very interesting stats, and I think they're great. I like Mike Maloney because he goes through the stats. Okay, so in many countries in 1980, when that price was driven up to nearly £1,000, or nearly £1,000, yeah, it was nearly £1,000 actually. I remember it in the UK anyway. I think the pound was low then, so it was nearly $1,000 also. And gold then was illegal. Illegal in China, illegal in India to hold bullion. It was unaffordable in Africa and South America and other countries, just unaffordable. So what market have you got for buying gold and silver now? Okay, let's look at the money supply. How much more money is there in circulation now than there was in 1980? I kid you not, 55 times. 55 times as much money. Chasing twice, just 2 times as much gold. 55 times more money, 2 times more gold. A lot more information available to people. People with a lot more money. People allowed to buy bullion and hold bullion. And do you know what? Mike calculates it that there are 18 times as many people now able to buy gold and silver as there was then. 18 times as many people, 55 times as much money, massive institutions that feel it's their right to take control of gold, silver. And let's go back to that Miles Harris piece. Let's think about this. Because all that gold and silver, other than that held by David Batemen, and others who have thought about it and taken delivery of bullion, is held in the centre. Essentially, institutions, central banks, it's held in the centre. Okay, so we have to be very careful here. They're going to tokenise it, as I told you in a presentation a few days ago. Is that really your gold? It's gone. Flick of a switch. But there are incredible similarities between the 1980 and now. So if we take 1980 and we take the gold price then, and we inflate it through to now, we've only just gone past that price. And yet there is 55 times as much money and only twice as much gold. So please, think about all these dots that I'm joining for you. Okay, think about them. I'm only halfway through Mike's presentation, so I'll probably finish it tomorrow. Because why not? These are facts, these are interesting, relevant facts for you to consider in both protecting yourself, the armour, and preparing for the future, the sword. Gold and silver are providing both. Okay? And it's not expensive when you look at the real data. When you look at the simple data that the FT and the Wall Street Journal and the BBC and CNBC and Bloomberg will present to you, gold is twice the price of this or 3 times the price of that, but they don't tell you there's 55 times as much money in the system. There are 18 times more people able to buy gold and silver and hold it. They don't tell you that because they don't want you to know it. They want to buy it. They don't want you to buy it, okay? Thank you very much for watching, and please do share these and let's try and get the subscriber base up. It took a really good move from 5 to 8,000, but now it's slowed down. I'd love to get it up over that 10,000 mark and beyond, as Buzz Lightyear says, and beyond, because we're getting facts, we're getting reality, we're getting real data that allows you to not be simply put off by a simple, oh, it's hit an all-time high. We've got 55 times as much money chasing only twice as much product. Think about that. Thank you very much.